Should you buy Apple stock? So far in 2022, Apple stock has outperformed its rivals. Shares are down only 15% year to date, while Alphabet is down 37%, Amazon is down 42%, and Meta is down 72%. Right now, the company has a market cap of $2.43 trillion with $48 billion of cash, including $25 billion in marketable securities. For perspective, Apple's market cap is bigger than the GDP of Canada. Over the last 12 months, the company made $394.3 billion in revenue, $99.8 billion in net income, and $6.11 earnings per share. Revenue was up 7.8% year over year, net income was up 5.4%, and thanks to a strong buyback scheme, earnings per share increased 9%. That means Apple's stock is now valued at 6.4 times revenue and 25 times earnings. The company also pays a dividend of 0.6% and it repurchased $89.4 billion of its own stock. In last week's annual report, Apple showed healthy product sales for 2022. iPhone sales were up 7.2% to $206 billion. Mac sales were up 14% to $40 billion. Wearables were up 7.3% to $41 billion. Services were up 14% to $78 billion, but iPad sales were down 8% to $29 billion. Considering Apple's dominance, it's not surprising to see its stock outperform. Apple is also seen as a relative safe haven versus volatile growth stocks, crashing bonds, and foreign markets. However, there are also risks to owning Apple stock. US-China trade relations are disrupting Apple's manufacturing. In one example, the company has had to halt its plan to use China's YMTC memory chips, and tensions like these show no sign of easing. Also, Apple's PE ratio at 25 is still 30 to 40% above its long-term average. That would be okay if Apple was growing quickly, but as we saw, Apple grew revenue only 7% in 2022 and net income only 5%. Furthermore, Apple's sheer dominance will draw the attention of regulators. That said, Apple maintains a strong brand and its earnings per share is supported by buybacks. Assume that Apple grows earnings per share 10% a year for the next 10 years, then trades at 25 times those earnings. We get a share price of $396 in 10 years' time. That equates to an annualized return of roughly 10.5% per annum, including dividends. All in all, Apple is clearly a quality company, but it looks fairly valued. That's why I give the stock a neutral rating, and I do own shares in Apple. But these are my own personal opinions, not financial advice. For more detailed analysis, visit our website.